Well, good afternoon on the second day of the BioHealth Capital Region Forum, and it's our seventh. And we have a great speaker lined up to talk about one of the most popular topics we have every year, and that's capital, venture capital, and what's going on in the venture capital industry. And our speaker is one of the most experienced and most prolific investors in the life science industry, especially over the last 3 years. And our speaker will be Joel Marcus, who's the executive chairman and founder of Alexandria Real Estate Equities, as well as Alexandria Venture Investments. Briefly, Joel was the founder of Alexandria and started in his garage in 1994 with a $19 million Series A investment. And today, shareholder return is exceeding 2,000%. Yep, that's 2,000%. And there's a market cap of over $36 billion on Alexandria today. So it would have been a great investment for all of us. Also in 1996, Mr. Marcus founded Alexandria Venture Investments. It's a strategic venture capital platform to invest in promising seed, early stage, and growth stage life science, agri, and technology companies. It continues to lead Alexandria Investments and is recognized by Silicon Valley Bank as the #1 most active biopharma corporate venture capital investor in new deal volume for 4 consecutive years now. They have approximately $2 billion under management, and they continue to make investments in many of the life science and breakthrough areas, which Joel will discuss today. With that, Joel, welcome to the BioHealth Capital Region again, and thank you again for being a strong supporter of this region.
Well, thank you, Rich, so very much, and to the BioHealth Innovation for inviting me to speak. And certainly your longtime leadership has been crucial to catalyzing this region, and we deeply appreciate that so very much. Before you came, Maryland was an important market to us, but really lacked, I think, the leadership and the kind of cluster and ecosystem catalyzation that you've, remarkably and uniquely been able to provide to us. So as you all know, it's been a mission critical time for the life science industry. We're now entering our 20 or 21st month of COVID. We at Alexandria and at Alexandria Venture Investments have really tried to be at the heart and the vanguard of this industry, providing, mission critical facilities, and over 100 of our tenants have been very actively involved in, fighting COVID, whether it be through testing, through the diagnostic side, through the vaccine and important, obviously, vaccine side, which has been remarkable, and then obviously on the therapeutic side. And we're proud to have served this industry since 1994. We're entering really, as many of you know, really have entered a new golden age for biotechnology. It's important to remember too that there are about 10,000 known diseases to mankind, and probably 500 or so, give or take, only have addressable therapies, very few of which are really cures. And so that's about 5% of diseases that there are no answers for. And so we see the biology revolution, and this time being really important, and COVID has shown a very bright light on this industry, and we're honored and thankful to be a part of that. The industry is on a record-breaking pace in 2021 to beat all previous years, and last year was a historic high. We've been fortunate enough to have a long-standing relationship with both Rich and the BioHealth Innovation effort that he has led for quite a long time, and we're very appreciative of all the hard work that he and his team have given. Alexandria, as Rich mentioned, is really a unique and mission-driven entity focused on unique infrastructure with operational excellence that backs it up. We have a venture arm. We manage about $2 billion today. We have a thought leadership arm, and then we spend a lot of time on corporate social responsibility. I'm in New York tonight for the honor of being part of the 9/11 Memorial and Museum effort which culminates in the remembrance ceremony on Saturday for 9/11. Today, Alexandria has, Maryland was our second market, and we're proud to say today we own and operate over 4 million square feet of mission critical lab space in the important Maryland region, mostly along the I-270 corridor, with a total asset base kind of nationwide of approaching 60 million square feet. As Rich said, we started our venture arm in 1996. Our first investment was in the Seattle region, but we followed shortly thereafter with a number of investments in the Maryland region. We were very active with Alan Walton in the early days of the genetic and genomics revolution, where Alan formed a whole bunch of early companies in Maryland, and Maryland was really, in many cases, the leader in that particular era and that set of really important groundbreaking discoveries. So let me maybe move to the slides. At the moment, I've got a handful of slides that I want to cover, and then I'll come back a little bit to talk about the Maryland life science market specifically after the slides. So maybe let me start off by saying, as Rich said, we're the most active biopharma investor over the last several years, according to Silicon Valley Bank. It's important maybe at the front end, before I get into the specific slides, to talk about, and I think Rich may have some Q&As in this regard, you know, what represent the headwinds to this industry, because it's had such a tailwind at its back. It's pretty clear that there are really four pillars of headwinds, one being some of the drug pricing and Medicare reform that's being talked about right now at the current administration. FDA concerns, I think the leadership of the future leadership of the FDA is really important. Janet Woodcock has done an amazingly great job of guiding the agency over the last period of time, but I think there'll likely be a new leader. And will that leader be really knowledgeable and really value add to that agency rather than simply an administrative caretaker, which we wouldn't want to see appointed? I think corporate tax reform, or really tax, I'm not sure I call it reform, but tax increases is in the minds of many people. It's hard to stay competitive in the world with high tax rates. We've seen that time and time again. I also think that one of the sad parts of the infrastructure bill kicking around in Congress is it really is a 20th century infrastructure bill. It should be a 21st century infrastructure bill focused heavily on next-gen manufacturing, focused on bringing semiconductor industry manufacturing back to the US. We only do about 11 to 13% today. And there's so many, the whole electric vehicle effort, we should be focusing that more, way more on repatriation of critical supply lines and things like that, rather than thinking strictly of more rail or more things like that that maybe people are not taking so much today. I think apropos of the Maryland region, the NIH, which is the substrate for much of great discoveries, has a historic high. This year, they'll probably have a budget coming up of about $51 billion, a record high, of 18% up over past years. Maybe let's move then into the first slide. So the first slide talks about the new golden age for biotechnology. 2020 was a groundbreaking record year, and it looks like in many cases we're on track this year to beat many of the records that were set in 2020, and that's amazing. Some of the stats you see here, if you look at the past year and a half, venture capital has been at an all-time high, in biotech capital raised through either IPOs, or we'll talk more about this, or through secondary offerings has hit a high. And then the NIH budget, 23% over 2020 and 18% over last year. If we could go to the next slide. Apropos of the discussion that I discussed a few moments ago about the headwinds at the FDA for need for real, important, I think, knowledgeable leadership there for future FDA head. FDA drug approvals are part of the critical drivers of this industry. You see a historic chart since 2010. 2020 was almost an all-time high, and we're on a pace this year to potentially beat 2020 approvals to date through the first half of 2021, or 28 new drug approvals. And that is important. And I consider, and most of us do, who work in this and who are involved in the leadership of this industry, consider the FDA as really, together with the NIH, is really a crown jewel of America and this industry. And so very, very important. The next slide, I think, says a lot. This is, I mean, if you just look at 2015 versus 2020, literally a 2x increase in the amount of venture funds raised by funds in the life science industry, you know, or broadly U.S. venture capital, I should say, which is pretty groundbreaking. And this year we're on a pace to substantially beat the high water mark of 2020. And what this enables the industry to do, it really lays the foundation for future company formation, operation, and growth. So a critical driver of this industry. Moving now to venture capital for life science, the life science industry in particular on the next slide. This is strictly life science industry. If you again compare 2016 to 2021 year to date through the first half, we're on a pace 2x of 2016 just for half a year, and we're on a pace to beat last year's record of over $46 billion invested into life science companies here in the United States, almost $36 billion to date through half of the year, an all-time record-breaking high. Much of it is going into new company formation and most of the critical ecosystems and clusters, including the BioHealth region and Maryland in particular. And this is just, I think, such a huge benchmark and important, I think, really kind of edification, memorialization of what's going on out there in the regions by so many venture firms, both ones who have been at it a long time and quite new firms. So this is venture from seed up till you know, IPO. So very, very significant. The next slide is important, is kind of the next step. So it's the initial public offering market. And again, if you just look at this, if you go back a decade, you know, when we were not even at $1 billion of IPOs back in 2011, 2012, last year we hit almost $13 billion of IPOs. This year might not quite get there, but we're already at over $8 billion for initial public offerings of life science companies on United States stock exchanges. Again, a huge increase over the last many years, and really truly record-breaking. And obviously the IPO is a critical financing transaction, which then enables the company at the public level to have more sources of capital and a cheaper cost of capital. And the final slide I'd like to show would be the next natural progression after initial public offerings, which is the follow-on financings in the life science industry. Again, if you go back to 2011 at 3.5 billion, look at last year at almost 45 billion. So, you know, a 12, 13, 14x increase this year. We're probably not on the pace to keep up with 2020, but we've already done over 17 billion and on a pace maybe to get to the 30 or 35 or 40 billion range. Maybe it'll be higher, don't know. But again, a critical part of the substrate of financing of this industry. So we're pretty proud and you know, feeling very good about the tailwinds that this industry has. Let me go from macro to micro for a minute before turning it back over to Rich for some back and forth Q&A. as I hinted earlier, we've been impressed particularly by the growth and momentum in the BioHealth region. It's pretty clear that given the pandemic, some of the region's great strengths have been immunology, infectious disease. Companies like AstraZeneca, Novavax, GlaxoSmithKline, Catalent have done groundbreaking work in fighting, COVID in various degrees. NIH funding to the region has been almost $2.5 billion for 2020, which is great. And if you look on the venture side, the first half of 2021, the region saw nearly $1.2 billion of life science investment, which substantially surpassed $700 million in 2020. So that's all really good things. And if you look at a couple of case studies, a number of companies have done really interesting financings, including a company called Miracule, M-I-R-E-C-U-L-E. They did almost $6 million seed financing, which we participated in really the RNA medicine area for cancer and rare diseases. Veralox closed a $17 million Series A. Again, first-in-class medicines for hematological and autoimmune diseases. We're a participant in that syndicate led by Hatteras. And a spin-out out of Hopkins, Delphi Diagnostics, closed a $100 million Series A for next-gen cancer detection. On the later side, quite a number of big financings, Arcellx, In Silico Medicine, Cerenomics, IPO, Sensei Bio, Next Immune, Immunocore, and the story goes on. And then an M&A transaction, Viela Bio by Horizon, $2.6 billion, and then $300 million acquisition of Biogene by Charles River. And the region has become, I think, a true hub of next-gen manufacturing for gene and cell therapy, and we think that that bodes very well for the future of the region. So maybe with that, as kind of a topside macro and micro review, let me kick it back to Rich for some back and forth Q&A. So Rich.
Yeah, Joel, thank you very much. Great summary of where we stand within the investment arena this year. You talked about the tailwinds and a little bit about the headwinds. And before we do a little deeper dive into the BioHealth Capital Region in Maryland, what are you seeing for the outlook of the overall market for the rest of 2021? And then what do you see for 2022 in the investment climate?
Yeah, so I think, if you just looked at the few charts that I showed, they showed record pace and record-breaking numbers, both privately and publicly. And I think we'll see that, assuming there are no black swan events. I mean, Afghanistan was one that people, certainly were worried about. I mean, it's a tragedy, but yet it didn't roil the markets too terribly much, which is a good thing. I think, I would see the rest of the year to be on pace to break almost all 2020 records, and I think 2022 could be a historic year. I do think that the two really danger points are, number one, is if the administration appoints somebody at the FDA who really isn't a talented and great and knowledgeable leader of the industry, that will not be good for the industry. And secondly, if there was a black swan event, I mean, one of the biggest worries is, does China rear its head and start making unreasonable demands of reunification of Taiwan? Those are the kind of things that we have no control over, but that could absolutely tank the markets. And then I think the final one would be, the third one would be this $3.5 trillion package that I think is really being pushed by Bernie Sanders. And I think, some of the programs make sense, but I think people have to look at that and try to understand we've just been through a time of spending, what, $5, $6, $7 trillion getting through, and I won't say out of COVID because we're going from pandemic to endemic, but the country can almost only take so much debt, and if that supercharges interest rates, it moves the Fed to raise rates. We could end up back into the days of the Jimmy Carter. My first mortgage was a 17% mortgage. How many people today could buy homes and take on a 17% mortgage? So those are the things that I think we all worry about very much.
Yeah. Also, let's talk a little bit about the difference in the commercial real estate market. You're very fortunate to be in the hottest sector, which is in the wet lab and the bio and the life science industry. And I guess there's some new trends emerging within commercial real estate, which helps feed what goes on in the investment and the venture capital world. Talk a little bit about what you see in the progression of biomanufacturing versus traditional R&D, and also a little bit about what you see in conversion from commercial to wet lab as a trend that's happening in the country as well.
Yeah. So I think number one, the hot sectors really have been, I think the hottest sector has been logistics. And that has just dominated a lot of the real estate investments. Data centers have also been super hot, and life science, which we started as really a niche play in real estate, has become more mainstream, but it's still, it's still a limited market. It services a single industry. It's not like logistics where you can, have billions of square feet or, hundreds of millions of square feet. So it's different. It's still, a focus, and it's really only concentrated in the existing regions or existing clusters. And one of the barriers to entry for new clusters is that there isn't a talent pool. So many companies could start in, whether it's the Midwest or the South or wherever, the mountain regions, but they can't really grow in those regions because there are not enough talented and trained people to really grow a company to get to commercialization. So the companies have doubled down in the existing regions. Obviously, the BioHealth region, a little bit in New York, which is still a startup region, big in Boston, which is the #1 region. North Carolina has come along nicely. San Francisco has, been super busy, San Diego, Seattle, et cetera. But new regions are hard. I think the great strength of the BioHealth region has been now the reemergence of the FDA and the NIH. For a number of years, they were left underfunded and really lagging for quite a while. There was a period of about a decade where BioHealth region, as you know well, was really sluggish and stagnant. That has now kind of been a game-changing effort. You asked about manufacturing. I think it's pretty clear COVID shined a light on two big things. One is the need for next-gen medicines that are going to be way more complex than the synthetic chemistry pills, much more complex. The gene therapies, cell therapies, et cetera. And along with that, the component that really has become very, very valuable because it's an integral part. You can't just outsource it to India or Puerto Rico or places like that and do a pill line manufacturing. It really is integral with the research. And so companies of significant value to the companies now is control, both geographically and ownership wise, either within their space or nearby to next-gen manufacturing. And I think the BioHealth region is done super well in that regard and is positioned to, I think, be a leader in that area. I think when you talk about, I'm sitting in New York, and every building owner in New York wants to convert their building to a life science building or a logistics building or a data center building. And the reality is in life science, very few can actually be converted because they don't have the design, they don't have the infrastructure, they don't have the floor to ceiling heights, they don't have the floor loading capacity, they don't have the hazardous material capability, goes on and on. And even if you got the building right, operationally, there are very few people that can actually operate these buildings because a logistics building is pretty simple. You build the building, you tell them to put their stuff in there, and that's the end of it. In a life science building, there was a situation that occurred not in our property, but in another life science landlord's property up in the Bay Area not too recently, where power went down, backup failed, and the pharma company had tens of millions of dollars of scientific research and -80 freezers, all of which was lost. Okay, so you might get into a building, but if you choose the wrong landlord who doesn't know what they're doing, you risk a huge loss. And so it's a way more complicated business than anybody really understands. So a lot of bunk out there these days.
Yeah, and also you mentioned it's hard for emerging clusters to catch up with the existing clusters because of the ecosystem they've built, the leverage, the talent, and the infrastructure that's there. So I guess I'm very encouraged by what you're doing in the BioHealth Capital Region in Maryland, because we're seeing Alexandria look at more investment opportunities for direct investment in companies. The other thing is, I think in the last 12 to 18 months, plus the future, I'm seeing more expansion plans by Alexandria in space expansion plans within the Maryland region. And a lot of times in the past, there wasn't a lot of speculative space being done. But I think based on the way that we have blossomed in the last year, I think you have a little more confidence in our region in its ability to grow. Is that true?
Yeah, well, I think the region went from stagnation for about a decade, heavily due to, I think, underfunding the NIH and really underfunding the FDA and the lack of really venture investments. Venture has now migrated, not necessarily physically there, but a lot of companies. I mentioned Hatteras. Hatteras out of North Carolina just led a deal. We're certainly involved in leading deals, and a whole new complement of companies. A couple that I'll just mention here: Tedco, Cataleo, Orbimed, a number of companies you hadn't seen so much on the ground, since the days of Alan Walton at Oxford, when they invested big time in the early 2000s and late 1990s in Maryland. So that's been a big boon. We've started developing over the past handful of years, and continue to develop at a pretty rapid pace. We're not necessarily in the business to do spec development, but we are developing where we see the demand, and we match the demand with our space. And so we're filling our space pretty well. I think our current development pipeline, we're 80% plus leased on the developments, which is pretty awesome. And we have great confidence. You've got companies like Novavax and quite a number of others who are expanding rapidly to meet the need, both COVID and non-COVID related. And I think we're seeing new company formation in a way we didn't see for the last decade. So we're feeling very good about the region. And so we're expanding both through development, some redevelopment, and we've got a very nice land pipeline in the I-270 corridor. I think things still seem quiet we haven't kind of taken any stake in Baltimore. I think it still will take time. I think the city needs to get back to a status quo where people feel comfortable from a governance standpoint there. John Hopkins has, I think, done a good job of translating science. There's some new company formations, but I think they still need a longer runway. So we haven't made any direct investments in that part of the region. And as you know, Virginia has been pretty big for kind of the digital health and the intersection of IT and life science. So we've still kind of concentrated on the I-270 corridor.
And focus is good. And you're a student of ecosystems and clusters around the United States, and you're in the top 7 life science clusters. Let's sort of close this conversation on what you look upon as the most important ingredients you have to build a successful cluster, because right now we're 4th based on genetic engineering news, with Boston, San Francisco, and New York ahead of us, and where our goal is to be a top 3 by 2023. So please tell me about what you feel are the major ingredients clusters need to have.
Yeah, well, I don't agree with that survey. I think Boston is 1, San Francisco is 2. Who comes after that could be by any measure. I don't think New York is really there. I think San Diego probably is next. But and I think the BioHealth region is probably a very close 4th.
Well, we'll talk to the editor about changing those rankings then.
You're there with an asterisk, three asterisks. Yeah, we formed the company on the basis of clusterization, Michael Porter, and it really is four critical ingredients. One, you got to have a world-class location. The BioHealth region has that. You got to have a deep substrate of research and clinical. You can't just do clinical, which is in most places, but most places don't have the deep translational research. That's lacking almost everywhere except for the core clusters. BioHealth luckily has that. The third ingredient is a great management pool, and that's the BioHealth region is one of the top in that area, and that's one of the rate limiting, I think, factors almost for every every cluster that wants to be a cluster. And then the final one is risk capital. And again, I think the BioHealth region has moved up tremendously over the past couple of years in attracting new venture capital. Certainly, we've been investing there for a long time. A number of folks have as well, but there's a new cohort of venture people that have come in, and we think that that's critical to the continued growth of the region. So those are the four kind of critical elements, and I hope that we can double down and start some new seed and Series A funds out there, and I know you guys are working on that, Rich.
Yep. Thank you very much, Joel. Basically, we're talking with Joel Marcus, who's the chairman and founder, Alexandria Real Estate Equities and Alexandria Venture Investments. Joel, as we close this segment, any closing comments or remarks you'd like to make for the audience related to sort of the future of venture capital and investment in America?
Yeah, I mean, I would just say on the eve of 9/11, I would just say, we should treasure this industry. This industry is truly a national treasure, and it would be foolish to squander it. It would be foolish to imagine throwing away the great healthcare system. It has its faults, but you don't throw the baby away with the bathwater. You fix what we need to get fixed, but treasure the institutions and the structures that we have that really deliver the most innovative and best healthcare in the world. A lot of people criticize it, but that's not true. This is, go to any other country and try to get great healthcare on demand with innovative science backing it up. It literally doesn't exist in most places.
Great summary for this topic and basically for the biohealth industry, Joel. So thank you very much for again coming to our 7th annual BioHealth Capital Region Forum. As you know, we have our investment conference on the 28th and 29th of September, which Alexandria will be participating in. We thank you for your support, and also thank you for your leadership and growth and support of this region. So thank you very much, Joel.
Of course.